Today, I'm going to talk about a company that's following an incredible strategy, aiming to become the next big monopoly like Palantir or Booz Allen in the future. On top of that, its stock price is currently just $1.20. I'll even share some secrets about this company that you won't find in any source at a few points in this video. To not miss the chance of a lifetime, watch until the end, and if you're ready, let's dive right in. Castellum is a defense technology company listed on the NYSE American, specializing in information technology, electronic and information warfare, and cybersecurity. The company provides high-level services like software development, cybersecurity, data analytics, and systems engineering to federal government, financial, healthcare, and other sector clients. Over the past 3 years, Castellum has executed a strong M&A strategy by acquiring 6 technology companies, building a portfolio with $400 million in potential business opportunities and a contract backlog of approximately $90 million. Looking at the company's business model and technology, we see that Castellum's main strategy is aggressive growth in the tech sector. On one hand, it expands its service portfolio through M&A by acquiring additional companies, and on the other, it focuses on growing its internal projects. According to the management team, Castellum has made 6 major acquisitions in recent years and is preparing to adapt to new market opportunities. Moreover, the company seeks to increase its revenue through federal government contracts and private sector orders. Focusing on intensive work processes, software development, and projects requiring national security within the company is a strategic advantage for creating sustainable revenue in the future. When it comes to its financial situation, Castellum's financial reports show that its revenue is growing, but it's not yet profitable. For example, in 2024, total revenue was approximately $44.8 million, close to the $45.2 million recorded in 2023. However, due to high expenses, the company incurred a net loss of about $10.0 million in 2024. This means its current P/E ratio is negative and hard to express with any specific value. The good news regarding financial stability is that Castellum has significantly reduced its short-term debt. For instance, in June 2025, the company announced it paid off a large debt to the Buckhout Charitable Remainder Trust ahead of schedule, lowering its long-term debt from $12 million to below $5 million, strengthening the company's balance sheet. Castellum has recently gained attention with several key corporate events. Based on its 2024 data, the management team raised over $16 million in capital and secured a major $103.3 million contract. This is the largest deal in Castellum's history and promises a significant revenue leap. Early in 2025, the company raised approximately $9.5 million through 2 share issuances, $4.5 million in March and $5.0 million in June. These funds will be used for corporate development, project execution, and enhancing the value of new technologies. Additionally, in June 2025, Castellum entered a strategic partnership with Amplitech Group, gaining the ability to offer their low-noise amplifier products to its clients. At the same time, the company launched a new technology subsidiary called Castellum Advanced Technology Products, starting work on products for modern weapon systems. Through this subsidiary, Castellum intends to offer more advanced technological solutions to the Department of Defense and boost future revenues. These successful financial operations and new initiatives clearly highlight Castellum's strategic priorities, technological superiority, and commitment to continuous development. Now, I'll share some information that you won't find on any channel or source, but I'll reveal it to you. I believe Castellum's access to federal contracts increases its chance of becoming unrivaled in the market. Working with the U.S. government isn't just about revenue, it also builds reputation and long-term contract stability. Breaking into this field once means overcoming a huge entry barrier. Each new contract positions Castellum ahead of other emerging companies. This could form a semi-official natural monopoly. You've probably noticed yourself that companies that work directly with the government and collaborate with it tend to rise significantly and very quickly thanks to state financial support. Analysts and investment platforms continue to view Castellum positively. For example, TipRanks lists a 1-year price target of $3 for Castellum, suggesting a potential 152% increase from the current level. MarketBeat agrees with TipRanks, noting a consensus buy rating for the company's stock with a $3 target price. Based on this, major analyst forecasts suggest Castellum will gain more value in the long term. It's worth mentioning that in April 2025, the well-known broker Maxim Group set a buy rating for the company with a 1-year average price target of $1.17, but 4 months later, the current price is already above that target. I mention this because setting targets for companies at this stage isn't easy, as they lack established, solid financial reports. Price targets at this this stage can mislead people, and sometimes stocks rise 4 to 5 times higher than those targets. As for the company's future prospects, I must say that Castellum's long-term success will largely depend on the realization of its contract portfolio. The leadership has highlighted a Phase 2 strategy, emphasizing organic growth. The $400 million market opportunities and $103.3 million licensed contract showcase Castellum's future potential. Based on current analyst forecasts, if the company successfully continues this strategy, its stock price could rise several times from its current level, say, to the $3 to $5 range, within the next 1 to 2 years. However, this depends on the company overcoming its current losses and turning new contracts into revenue. Since Castellum isn't profitable yet, these levels are genuinely risky projections. So, investors should carefully monitor the company's financial metrics, especially profitability and cash flow, before making long-term investment decisions. In conclusion, we can say that Castellum Incorporated looks promising amid its current strategic strengthening and major contracts, but its high valuation and revenue mismatch make it a high-risk, high-potential stock. As an extra, I'd like to share a few more secrets about this company. The cybersecurity and information warfare sectors are the arms manufacturing of the 2020s, as governments and giant corporations strengthen their information weapons. Castellum's position in this field, in a sector poised for rapid growth amid warfare and geopolitical instability, means it's in the right place at the right time. Political risks here turn into opportunities. On the other hand, acquiring 6 companies isn't just about aggressive growth or the traditional startup path. Instead, it's about building a modular system. By integrating different technologies and teams into its network, Castellum is constructing the foundation of a larger, integrated tech player in the future. I think this could be the beginning of becoming a giant like Palantir or Booz Allen in analytics and security. I'll add that forming opinions about companies at this stage is challenging due to the lack of solid financial reports, so I can only speculate based on what they might achieve. I don't want my thoughts to mislead you, and these opinions are not investment advice. My intention is to educate you, broaden your horizons, and help you spot future monopolistic opportunities. If my videos catch your interest, know that one like from you and even one new subscriber greatly motivates me to dive deeper into analyses. If you want to see more in-depth and exciting analyses, discover new companies, and spot future giants early, subscribe to my channel for free and like this video, then look forward to my next video on August 9th.